Hello everyone. Give me just a second, I'm having a little trouble here with the trading software. It's lagging a lot, like a lot. Webcam is always dying now as well, but I guess it's okay now. Anyways, guys, sorry. Today, I want to talk to you guys about something that I feel it's really important because I feel better yet. I know a lot of my uh, a lot of the people in my community, they just enter trades very impulsively. They don't really have rules, which is, I guess, it's really normal for beginners. Um, and Yesterday I was in a call with some of the guys from the community at least until 3:30 a.m., which is not very good in terms of routine. I'm failing that because I'm trying to trade mostly the London Open. Although I gotta say, I've been really liking the Asia session. Actually, the Sydney and Asia session, like which is from 10 p.m. in the night till 8 a.m. Because it just does what I'm gonna show you very well, very consistently, and it's usually a little bit more of a chilled environment because it's not like near crazy time, you know what I mean? And in terms of trading, if you're an anxious person, that might be hard in the sense that candles move slower, and if you want things to move faster, if you're not very patient, maybe it's not the right trading session for you. But also, if you're not patient, Asia session might be a good training for you because it will force you to be patient, right? And patience is probably one of the most important things in trading, like overall. Oh, by the way, I forgot to ask people how's my sound. Let me let me take the opportunity. Um, if someone is listening, can you just tell me if the sound is okay? It's a little bit like yesterday. I do have sound on my mic input, uh, according to my live stream software, but just trying to confirm that it's okay. Um, in any case, actually, let me confirm before explaining. I'll use the I'll use my phone because it would be stupid to start explaining without having this. Sounds good? Okay, man. Thank you. Okay, so yesterday during Asia session, and just for context first, we talked about the possibility of reaching a liquidation level that was at 61533. So I'm gonna put that in red or white. I'm gonna put that in red, but with mentioned liquidation level. And this was an interesting level because I had more confluences, regarding um, mainly regarding a TR pocket that we talked about, which, if I'm not mistaken, I think it was from the end of this big move to the New York correction. So, yeah, that liquidation level was interesting because it was right on the liquidation level, and the liquidation level itself was on a 15-minute pivot point. What do I mean? If we go way back to this wick, you have two pivot points. I mentioned on previous streams that these lows needed fixing, and also they were poor TPO lows. If I load up the TPO indicator, you can see, it's not very clear and I know it's hard, but I'll try to zoom in. You can see that the low of this day has two blocks. Generally, when you see two blocks on the buying or selling tail of TPO indicator, that's a TPO chart, daily TPO chart, you will see that most of the times that doesn't really offer any kind of support. It just goes through it like butter. And the only two pivot points on the 15-minute time frame that you have is this one, which we smash through pretty easily, and this one, which is the one that is right on top of the liquidation level. So when Asia started, and let me hide the TPO. Actually, when Sydney started, let me correct that. We were coming down. We took this guy. We took the poor TPO lows pretty easily, and then we took the first mentioned 15-minute pivot point that I mentioned, also pretty easily. And we came really close to the red line here, which is the said mentioned liquidation level. Okay. However, we did one thing that is very common for Sydney and Asia, and it's actually very common overall. Period. As a possible and more probable success, or better yet, it's a setup. Let's call it a setup that is more probable to be a successful trade or to give you a successful trade. Okay. And overall, it's comprised of three rules essentially. You have to have a divergence in between two lows, which in this case is something like this, right? You have two lows. They have to diverge, and then you have to change market structure. Essentially, that's it. So if you draw it, you really don't have to complicate it a lot more like this. What I usually do to explain this to my students to help them understand is, imagine a triangle. So this is the first low, and this is the highest that it goes after it creates that low, right? And then you have the second low, right? So in between these two lows, you need to have a divergence, which we do. Okay. It's not very visible maybe like this, but if I expand it, you'll see that it's pretty clear, right? Even correcting to here, it's pretty clear. You have a divergence, and then the idea is that you need to close, not a wick like this, you need to close a candle above the highest point in between those two, okay? And that basically confirms to you that at least on the 1 minute, you are changing structure. This is especially better if you are grabbing liquidity beforehand and then do this, because it means that on a higher time frame, it took liquidity, and then as a rule, you go into a lower time frame and you try to find a better entry, a better risk to reward entry, following that logic that you took liquidity and are now having a reaction. From the moment that this happens, so the moment from this vertical line forward, which is when you have the confirmation, and it's when you should be looking for a long. Ideally, you only want to get in on something after price creates a fair value gap. The first time that we create a fair value gap is here, in between these three candles, right? That's a fair value gap. And as such, as an overall entry, you can either use the low, or you can use the gap. But in theory, this is a protected low because it took 3 candles lows before it, and it's the candle that forms the fair value gap. So supposedly there's power for intention here. And in terms of take profits, you can just look at the previous swing or try to target a little bit more than that. But this, for example, is your safest take profit. It's the nearest one, and it's the safest take profit. Essentially, that is all we're doing. We're not doing anything uh, really complicated. I don't think you need crazy indicators for this. This is something custom that that me and Andre did together, AFMC, from our Discord. But for example, I like this one very much too. It's the TDI RSI. There are a lot of different versions of it. I like this one. But as you can see, it also has a divergence. And you can use other things, but you know, something as simple as an RSI. That's what I mean. As simple as an RSI can work. Okay, you don't need to buy expensive indicators. You don't need to have like footprint chart software and bookmap and liquidation levels and all of that. Like, of course, everything helps in the sense that it's confluence. Like, it can give you more confidence for a trade, the more tools that you have. But in reality, these are the rules, because if these are the rules that are fundamental, everything else is kind of like extra. You don't really need it, you know. Then when we came back here, there was no div, so one of the rules wouldn't be present in this case. But then you can also Google on YouTube turtle soup. It's I mean turtle soup, really. It's a strategy that Richard Dennis invented for his traders. He used to be a teacher. He had an academy, and he taught a strategy where after you have a market structure change like the one we have here, wait for a liquidity grab and a fair value gap. And for example, in this case, we got a liquidity grab from this guy, right? And after that, you have this fair value gap. And again, you can use the gap itself, or you can use the block created by the fair value gap. And again, you can target, for example, this, or that, or that. And this is another successful trade. If you don't get in on this, most of the times you will get away with simply grabbing a block that has its low taken and creates a gap. So you have a gap here, this block would have worked. You have a gap here, this block would have worked. And after this, it gets a little bit more dangerous because it creates a liquidity, a resting liquidity setup like this. So you know that at some point or another, it's possible for price to come and clean some of this up, if not all of this, and only then continuing. Which, if there's a gap, again, it would be a turtle soup entry. Richard Dennis taught this to his academy students as a basic setup, and for example, this would have been an amazing trade as well. Never mind the volume gaps. I like using them, the volume profile, sorry. I like using them to see if that order block actually has some power, where the point of control is. And by the way I do it is going into the fixed range volume profile tool and going from the low to the point where I hoped the retrace starts, and as such the highest volume node is probably a strongest entry. And it was in this case. Actually tapped it very well. Doesn't always do that, to be honest. But this is an overall strategy, right? So after around 5 p.m. 5 a.m. UTC time, we do eventually get to that mentioned liquidation level, right? Which is also a 15-minute pivot point. And again, notice this. Notice the rules happening. You have a div starting from this low, right? It actually starts from this low and goes all the way down. This move right here, first of all, it's not like that those 3 points that I mentioned. Like, this is only the number 1 point. So now we would be waiting for a second one, and this is the second one, right? But now for us to confirm a market structure change, we would have to close above this, right? So price never does that, so we never get into a trade, theoretically. But then it goes up again, it does another one, so it takes out this guy again. So this would be number 1. It goes up to here and takes it out again, so this would be number 2. In between them, you still, like, you never stop having a divergence, right? And then eventually we do close above, right? When we do close above, right after, for example, you do have a fair value gap here, and closing above that, you could use the block. There's another fair value gap here, but we never used it. I know it's super tiny, but it is there. And then, for example, you have another really small gap over here. And again, I know it's super tiny, but it is there. Oh, sorry. I know it's super tiny, but it is there. And for example, you could, again, use that. Use the stop loss. I usually use the stop loss on whoever created the gap and has the lowest low of that pattern. But you know, you can use whatever you feel comfortable doing, because this is a super tiny one, right? And for example, the obvious liquidity or easiest liquidity target is that. But this trade, for example, went on to be an amazing trade, right? Could be an amazing trade. This could be 18% of your trade account if you risked 1% for that stop loss. Even without this, for example, the moment that you do close above structure, you have that third confirmation, right? This can also be a trade. And we would still be on this trade, by the way, if you let it ride. Would be coming back to that same TP that I mentioned, but it would still be open. It can still go further. We don't know for sure, right? But what I mean is, this is a very common situation, especially during Asia, and it's something that works on all markets. I can guarantee. I've been backtesting a lot of this. You don't have to take my word for it. You can also, and should, backtest it and see it as an example. And this kind of prevents you from doing market order entries that are not only going to be lower risk to reward, but in terms of confidence, it's always gonna take you into worse situations, even psychologically, right? Because, for example, going back to this situation and imagining, like, yeah, okay, you see this and you see this big candle, and imagine that you enter on the middle of it or something. Imagine that you enter like this. Your stop loss still has to go there. So, for example, for me to target this guy, or even that guy, this is not even a 2-to-1 trade. And it's a stressful one, right? Because you'll feel that the entry wasn't really good. The moment it starts retracing a little bit, you'll feel anxious because it is super possible that it comes back here, right? Comes back here to test this support, which it did, right? It did come back to test that and then continued higher. Um, so when it starts coming back to your stop loss, you'll think, should I close and not risk, or well, it can still come back to that support and then go. I'll leave the stop loss there, and then it starts getting into it, and you're like, maybe I'll move the stop loss a little bit, and all of a sudden you have a terrible trade, risking more than you were planning to win in the beginning. And now if it starts going up, every time that it bumps into green and then back into red, you're anxious all the way. It's not a very healthy way to trade, you know what I mean? And then when it comes here and it takes out this high, for example, you either do the smart thing and close, or if it starts closing strong candles like this with fair value gaps, your mind starts racing through all of the same processes, all of the same thoughts that it did when being here. So not only having a plan gives you better risk to reward, but it gives you a little bit more of a peace of mind, even if it's just for the sake of being successful at following a plan, a system, and rules. Right? There's a reason why the Marines, for example, do their bed every morning and start with that, because even if you have a shitty day, when the day ends and you go back to bed to sleep, the bed being made reminds you that at least did something right today, right? It's always something to remind you that you don't have to do your bed or prepare the bed to sleep before needing to sleep. Like, you did that right in the beginning. And sometimes it's like creating small habits, like small chores, things that we don't like doing, right? But we do it anyway because it's discipline and we're focusing on that. It helps us to have a little bit more of a motivation, either when the day ends um, or when, we have a bad day and we just need something to remind us that we're not all that bad. Um, so yeah, basically, this like 1, 2, 3 setup of confirmations um, is to me one of the best ways that you can trade, if I'm honest. And if you don't catch these trades in the beginning, you can then wait for a liquidity grab into a fair value gap. A liquidity grab like the one that happened here into a fair value gap. Or for example, when London started, if you notice, we take out this guy, we don't have a divergence, right? Uh, the let me show the TDRSI. When we have the low being made, we don't have a divergence. So we still continue, but anyway, it does come back down. When it does come back down, notice that we have the same setup all over again. Does this, sorry, wrong tool. Does this, goes again. Does this, we already have a div, but it doesn't close above this, right? But then it does another one, still has a div, closes above. This can be your entry, right? This area can be your entry, something like this. Something like this can be your entry, which would then get triggered up ahead. Or again, you can use order blocks that have gaps. The only order block that has a gap in this price action, if you notice, is this one. Right? You can even use that high because it's also part of a sell. And using, for example, the same reasoning for liquidity grabs, you can target that. During our private session yesterday, we were talking about this order block. Somewhere around here was a TPO point of control. So it was a previous day point of control, right? Because they had just ended. And again, this is 8 1% of your account. This one is not as good, but it's almost 2 to 1. You can do both in case this being a very tight stop loss. If you lose this one, at least you can probably manage to get that one, or at least secure your 1% so that you're not in a red day. You break even. You can do this for a long time in several markets. New York is a little bit harder because it grabs liquidity more often and disregards this setup a lot. But for example, as we are speaking, it is happening right now. For example, here's the W again, or we can even do it. Sorry, an M. This looks more like an M. We can even mention it like this, because even in between these two, there's also a div over here. So again, for example, closing below this guy, this can be an entry, right? And for example, right now we would be doing around 2% of the account, right? So I mean, this is pretty much an universal way, but you do gotta focus that for it to work, you do need to wait for sessions to transition from each other. If that doesn't happen, in the sense of like you're already in the session, you just came to the computer, and you're seeing like a simple liquidity grab into a block that creates a gap, then you can use that block if the setup has already occurred. So imagine that, for example, you only came up to the chart at here at around 10 a.m. UTC time, and you see that that setup has already occurred over here, right? Just wait for price to have a reaction, and then you will probably have something to enter from. For example, there's an order block here, another order block there. You can use them as limit orders and target what would have been this setup's target, right? In this case, could be the regular order block. This dashed red line is the Asia high. Could use that too. I mean, there are a lot of possibilities, but what I mean is, first of all, getting into a market order after a setup has already happened will reduce your risk reward a lot, because the stop loss still has to go to where the setup's stop loss would be. It's the only stop loss that you have as a safe one. But after that, I mean, either you have rules, you have a plan, right? There's a saying that says, by not having a plan, you are preparing to fail, essentially. It was something like this. Actually, I think I have it on my, let me see, I have it on my Notion dashboard. I think it's an American saying. By failing to prepare, you are preparing to fail, right? So this is essentially the lack of not having a plan, some rules to follow. You're essentially setting yourself up for failure, right? And if you don't fail, you'll probably stress more. And I don't think anyone can do this for a long time with a lot of stress, right? It's just, I think it's just unlikely that you'll succeed for a long time with like stressful situations. You'll just grow tired of it. Whereas if you follow rules, if you have a plan, if you fail to plan, you plan to fail. Okay. Yeah. If you have rules and if you have that plan, even if the trade loses, and at least, of course, it sucks to lose money, I know, I've been there. But at least in terms, like, it won't hurt mentally, it won't hurt as much because you did everything right. You followed your plan, you followed your rules, and if you have proof to yourself that those rules generally give you good results, um, you can feel like you can feel okay about losing because you know that once you get, even if you get another loss after that, you will know that when you do get one win, it will compensate for the losses and even give you profit on top of that, right? Okay, so that being said, we are finally retracing, right? And now let's take a look at the enterprise section. So overall, I think that yes, we are bearish. I think that it's likely for us to continue going down. However, we have to be aware of two main factors. The main factor is that this is a very juicy liquidity curve, and unless you have confirmations like the ones that I've just explained, again, getting into shorts on this area can be dangerous because there is a chance that price ranges for a while and takes it all. And essentially, I think this is the most safe short, uh, and I'm talking like a swing short. Either here or taking this as a liquidity grab can be a very nice area. Would mean to grab most of the liquidation levels that we have currently. And the thing is, if you are, or if you manage to catch along from down here, expect it to be possible to reach either this or that. And as such, when and if you trigger a short from up here, keep your long open, take some profit, but keep your long open, because if that short fails, that long will secure some profit, right? Um, Imagining that you do a 1 minute entry like the ones that I just showed you, um, and if for whatever reason it fails, maybe the stop is too tight, maybe your entry wasn't as good, maybe whatever. If it loses, the long that you catch from here, from down here, can save that negative drawdown, right? Um, so overall, let me look into the 15-minute, for example. I think that, yeah, even on the 15-minute, not only did we get the same setup that I am talking about, right? We are closing structure above. Now, the thing is, we do have resting liquidity. Let me just delete these ones. We do have resting liquidity down here, and we can still come back, for example, for this block or this liquidation level as a retracement. And again, doing that volume profile technique, we can drag the volume profile from here to there. And as you can see, we have a high volume node. Let me just delete this. We have a high volume node here, here on that order block. This point of control was already tested, so I would expect actually this to be taken if you are on a short from there. Remember that it's very possible that we take that out. And taking that out, we will probably go into a 618 range, a golden pocket range, right? For example, that liquidation level that I just marked out is just $1 difference from the 786. That's an interesting zone. And the 702 is on the 15-minute order block. So this overall area down here, I wouldn't say the 618 is interesting because it's where a gap exists, right? So I wouldn't actually use the 618 as an entry, but this is where we have a volume gap. However, going into the 702 and the 786 can be a probable trade. So maybe something like this. I think that's, let me delete this to see the volume profile better. Yeah, on here, this line here at 61,900, around that. So this can be a trade that might take us to higher liquidation levels. So again, I would personally, like to see it come into this area. When it comes to this area, I would look for the same logic all over again, and even if it doesn't change structure here, then I would look into something like this. And that way I would be able to reduce my risk a bit for a safe trade, but I would probably find an order block on the 1 minute that would probably even show me something like this, right? So yeah, this would be the ideal scenario. I'm having people on Discord saying no sound. Guys, come to the stream. Let me just write that to them. When I'm streaming, I have to mute Discord. Sound is muted because if not, I do echo. So basically, if I were to give you guys a plan for today during the New York session, I would say to look at the 702, 618.95 and around this liquidation level at 61590 into the idea of going up a little bit more. And I'm saying a little bit more because the higher we go, the less probable it might be to continue going up. But yeah, this looks really juicy. Like these stacked highs, they look really easy to get, especially now that we have shifted structure 2 times, and we have really this divergence is really strong. This is really steep, right? This is really accentuated. So I would guess that it has a high probability of starting to move up. And yeah, basically that's it. Let me just check out where we have single prints, where we have naked points of control and all that good stuff. Oh, by the way, I didn't finish. Let me go through my checklist. Because I didn't finish updating the liquidation level. So let me do that like step by step. Okay. Let me change it to 30 just to be a little bit easier. So we have just taken out this 100 liquidation level. So that's gone. We can still go for the remaining ones. So now to the upside. 64,560, 64,560. Sorry, the other way around. 560. Okay, that's really close to the current high, local high. Then I have 66,114. 66,114, which is the start of a 4-hour fair value gap. Then 66,714, which is the one I already had, which is nice, by the way, because it's the 618 deviation of this fair value gap. Fair value gap, what the fuck? Fibonacci. Then 67611, we have a big group of liquidation levels stacked up. 67611. Okay, it's right where the alpha block is. Interesting. And then medium leverage. I'm gonna update this one. Come on. Medium leverage at 6.8. What? 68815. Okay. It's the same liquidation level that I had. It just changed into medium leverage. So more people shorted, but probably stupid late, I'm guessing. Then we have 70. 7271. 7271. Okay. So yeah, I'm not interested in this area as a possible reaction for shorts, but this 1 hour regular order block seems okay. Now the problem is that it's a V-shaped recovery. What do I mean by that? A lot of the times you'll find that the best supports and resistance are big ranges, not like V-shaped recoveries. There's stuff like this, for example, like a stronger range, which, for example, we have a point of control lining up pretty nicely with a final, one of the final liquidation levels. Okay, so this is an interesting area. So yeah, I can close this now. Meaning I wouldn't really be surprised at all if I see this getting swept into that point of control of that range. Something like that. Yeah, that's pretty much the liquidation level. 73,100. 73,100. It's a possible place where we grab liquidity like this of this guy and do again our nice setup. Okay. That's a possibility. And but I wouldn't be surprised also of us grabbing all of this liquidity like so, getting the high block liquidation level, and doing the same setup here as well. And this can be the continuation for sure. I wouldn't be surprised anyway. One thing that I wanna also check is how are we doing in terms of structure for drop levels, because now on the 4 hour it probably makes more sense. Yeah. So on the 4 hour we can clearly see now 1 drop, 2 drops, 3 drops. A lot of the times this would mean that now we range or have a reversal situation, and then we'll have 1 drop, one push, retrace, 2 pushes, retrace, 3 pushes, which would take us to that order block over there as well, possibly. Possibly. Keyword, possibly. Now, VWAPs. Do we have any naked ones? No. None. Points of control. Let me change to the 30 minutes. By the way, for those who don't know, the 30-minute time frame gives you a little bit better precision on points of control. Our current point of control is on the liquidation level. That's interesting. So no TPO. It's loading. On the TPO, this is interesting. Notice that I don't see if you guys can see. This is a purple line. Can you see it? Let me see if I can oh, I don't have an option to that. Okay. Sorry about that. But I have it marked out on my, I'll show you on my markups. But that purple line was a single print. It was almost completely filled. And now this section here on the TPO chart is another single print, and it ends there, which is why it has that purple line over there. I think I talked about this the other day, but it's good to mention it anyway. We have single prints on the liquidation levels and on the alpha block, which is another confluence, right? Which makes that area very interesting. Once again, this is duplicated. I'm sorry about that. So this area is interesting. This area is interesting. We don't have interesting areas yet to the downside unless it's this golden pocket area and that liquidation level. So we want to get from points of interest to points of interest, right? So we want to get from this to one of these two. Also, let me see, do we have a poor low or high? Not really. That high is okay. This one not as good, actually. Which is interesting, because it's the all-time high. Would be funny if we just keep pushing and start doing all-time highs again. Against all public beliefs, right? This high is not as good. Only 3 blocks there, and it seems like it is. Yeah, just for example, one thing that I talk about a lot. If this candle's wick was like this, like so, that would be a better high, and it would make me believe that price would maybe come here and have more difficulty going above that high, okay? But it's not, it's all descending, right? It's all like making a ramp, a curve. So it's a little bit less likely that it holds as resistance, I mean. So, by the way, I can now delete this, which is perfect, I might add. 702 reaction here went all the way down to the 618, right? Really nice. So if we get a nice reaction here, from the same logic, the 272 is a nice target, 618 is a nice target, okay? At least for day trading. I guess that sums it up, guys. I would invite you guys to, especially during the Asia session, go through all of the coins that generally follow Bitcoin in terms of behavior, and see if you don't see, check out if you do see the same types of setups that I showed you guys for the Asia session that happened yesterday. Go and check out if you can identify the same setups, because there were a lot of them. I saw at least 4 coins that did it. Bitcoin Cash was one of them, if you want to check that out. And I say that it's a universal setup because it happens a lot. It happens really a lot. And I've seen it on Forex. I've seen it on things like the S&P 500. I think it's pretty universal. And it's basically that final move to take out liquidity a second time. It's basically what a lot of people call a stop hunt, right? The thing is that we're planning against the stop hunt. And that's why rules are important, okay? So I'll leave you guys here. I will be on Discord later. I'm gonna grab some lunch right now. I will be on Discord later, but I will probably let the New York session pan out because I'm interested in this section, and apparently I already lost the opportunity for this short, if I'm honest. But by the way, I didn't do one thing that Igor loves to do, which is check out Asia high and low. And the Asia high and low is from here to there. Come on. Yeah, got it. Isn't that interesting? Where we are retracing. That's TR pockets are kind of crazy, man. We are retracing and going down from a TR pocket from the Asia high to the Asia low. Isn't that interesting? 618 is at the liquidation level, by the way, just saying. So yeah, guys, I'll see you later. We'll talk soon. This one thing that I might add, it's kind of a shameless request for publicity, but it's an honorable one, okay? Because if you have someone who's struggling with rules, setups, and how to take entries, share this video with them because I think it's a good role model. I talk about this over and over on Discord, and for example, I know that my students are doing better when they do this, and they confess to me more often than I would like. They confess to me that when they don't follow rules like this, they usually, well, usually fuck up. So it's important, like whatever rule you have, man. I don't want to say that my way of trading is the best, just get some rules, backtest them, see if they really work, or if you just found out that you got like a lucky strike sometime. But get some rules, follow them, be consistent about them. Just like don't listen to anyone else if you're easily influenced by other people. Don't listen to anyone else. Just do your thing, okay? Just do your thing. If you know that it works, just do your thing. Don't care about what other people say, no matter how good they are, even if they are like a trader who has won several competitions. Doesn't matter. If your setup works, use it like a religion, okay? Like you're a super religious person, and that setup is your god, okay? Use it like a religion, but don't stray away, because generally when you stray away, that's when you have bad results, okay? Guys, I'll see you tomorrow. For those who are gonna be on Discord, I'll see you soon. I'm gonna grab lunch and I'll be there soon.